This video provides a review of MS&AD's financial performance for the fiscal year 2024, covering the period from April 2024 to March 2025. MS&AD is one of Japan's largest insurance groups, created through the merger of Mitsui Sumitomo and Aioi Nisei Dowa, which offers a wide range of insurance services, including both life and non-life insurance, in Japan and overseas. Key points for the fiscal year 2024 and outlook for 2025. In FY2024, net premiums written increased by 412.5 billion yen, up 9.7% to a total of 4,674 billion yen. Consolidated net income rose significantly by 87% to 691.6 billion yen, hitting record highs. Domestic non-life insurance recorded its highest ever profit, driven by increased earned premiums, profitability in fire insurance before catastrophe reserves, and higher gains from the sale of strategic equity holdings and investment income. Domestic life insurance saw a higher profit mainly due to increased interest and dividend income and lower initial contract expenses. Overseas subsidiaries also posted profit growth, largely led by strong underwriting and investment in the Americas and international life insurance, despite lower profits from Lloyd's and reinsurance. As a result, group-adjusted profit reached a record high for the second straight year. For fiscal year 2025, net premiums written are expected to rise by 5.2% to 4,916 billion yen. However, consolidated net income and group-adjusted profit are projected to decline. For fiscal year 2025, group-adjusted profit from domestic non-life insurance is expected to fall by 113.5 billion yen year-on-year, largely due to lower investment profit, despite higher underwriting profit. The company also plans to sell 573.5 billion yen in strategic equity holdings, which is 134.9 billion yen, less than the previous year, and will incur 45 billion yen in merger costs, categorized as extraordinary loss. Domestic life insurance profits are expected to remain flat compared to fiscal year 2024. Overseas subsidiaries' profit is forecast to increase, mainly due to improved performance in Lloyd's, reinsurance, and the Americas. Regarding shareholder returns, fiscal year 2024 dividends are set at 145 yen per share, an increase of 55 yen year-on-year. A share buyback of up to 145 billion yen was announced, of which 60 billion yen was executed. For fiscal year 2025, total dividends are planned at 155 yen, with a share buyback totaling 200 billion yen. Bottom line year-on-year change in net income for fiscal year 2024. The domestic non-life insurance business, including Mitsui Sumitomo Insurance and Aioi Nisei Dowa Insurance, saw a large profit increase mainly due to strong investment gains and improved insurance performance. Core underwriting profit also rose, while the impact from reserves for disasters was slightly positive. However, some of these gains were offset as extra costs and taxes reduced the total. Domestic life insurance added a small profit boost, and overseas subsidiaries, such as those in the Americas and international life insurance, contributed positively. As a result, the group's total profit for fiscal year 2024 increased significantly compared to the previous year. Voluntary automobile insurance. In fiscal year 2024, domestic voluntary automobile insurance saw a slight decrease in the number of accidents compared to the previous year. However, the EI loss ratio, which measures incurred losses relative to earned premiums, increased to 71.1%. This slight deterioration was mainly due to a rise in the average payout per claim for both vehicle damage and property damage liability, despite a general reduction in natural catastrophe impact. Impact of natural catastrophes. Domestic natural catastrophe losses decreased significantly compared to the previous year, mainly due to events like hailstorms in Hyogo and Tokai and typhoon number 10. In contrast, overseas natural catastrophe losses increased, driven largely by the impact of the California wildfires. These wildfires caused substantial damage across the group, with a notable portion attributed to Ioi Nisei Dowa Insurance. As a result, the overall impact of natural catastrophes shifted from domestic to overseas events. FY 2025 forecast. Bottom line year-on-year changes in consolidated net income. Net income is projected to decrease from fiscal year 2024. The domestic non-life insurance business is expected to account for most of this decline, mainly due to increased provisions for catastrophe reserves and a significant drop in investment profit, reflecting lower gains from the sale of strategic equity holdings. These negative factors outweigh the positive impact of higher underwriting profit. Net income from the domestic life insurance business is also forecast to decline, primarily because of lower expected interest and dividend income at MSADY Life, affected by the stronger yen. In contrast, overseas insurance subsidiaries are expected to see a modest increase in net income, supported by profit growth in Lloyd's, reinsurance, Europe, and the Americas, despite weaker results in Asia and international life insurance. Consolidation adjustments and other factors are expected to have a positive effect, helping to partially offset the overall decline in net income. This outlook reflects the challenges of balancing domestic and international business performance in a changing market environment. MS&AD's shareholder return policy is centered on maintaining a return of 50% of group-adjusted profit through a combination of dividends and share buybacks. The company adopts a progressive dividend approach, aiming for steady increases over time. In addition, proceeds from the accelerated sale of strategic equity holdings are specifically allocated to special dividends during the designated period. Ordinary dividends are calculated based on group-adjusted profit, excluding the portion from accelerated equity sales. Special dividends are provided only during the period of accelerated equity sales, which is set to continue until the end of fiscal year 2029, and are based on the profit derived from those sales. Share buybacks are then implemented using the amount that remains after dividends have been deducted from the total return allocation. The company also considers additional shareholder returns under certain conditions. These include situations where ESR, economic solvency ratio, consistently exceeds the upper limit of its target range, where profits decline due to large-scale natural catastrophes and stable returns are needed, where no promising growth investments are expected, or where improving capital efficiency becomes necessary. In fiscal year 2024, MS&AD paid annual dividends of 145 yen per share, which was an increase of 55 yen compared to the previous year and in line with forecasts. For share buybacks, a maximum of 145 billion yen was authorized as the basic return to shareholders, of which 60 billion yen had already been executed. Looking ahead to fiscal year 2025, the company forecasts annual dividends of 155 yen per share, which is a 10 yen increase from previous year. This consists of 120 yen in ordinary dividends and 35 yen in special dividends. Regarding share buybacks for fiscal year 2025, the plan includes an initial execution of 55 billion yen as a basic return during the interim period. Additionally, there's a plan for a further return of 60 billion yen. Altogether, the total share buyback amount projected for fiscal year 2025 reaches 200 billion yen. Stock price. This is the Japanese yen-based chart for the past year. The Japanese yen stock price is 3,238 yen as of June 13th. The US dollar stock price is $23.20 as of June 12th. Like other Japanese companies, MSAD's stock price temporarily plunged due to Trump's tariffs, but it has remained in a high range recently. The current PBR is 1.22 and the PER is 8.4. The dividend yield is 4.79%. Compared to the last few years, the PBR and PER suggest that the current stock price is relatively high, but the dividend has continued to increase, resulting in a higher dividend yield compared to before. Conclusion: MS&AD delivered record-high profits in fiscal 2024, largely supported by sales of cross-holding shares. However, profits are projected to decline in fiscal 2025 due to lower investment income and higher provisions despite continued strength in underwriting. The company remains committed to generous shareholder returns, with increased dividends and substantial share buybacks planned at least. MS&AD is expected to perform better in the future as it strengthens its business fundamentals and investment strategy.